Let's get straight to the market and this rally with G Squared Private Wealth CIO and CNBC contributor Victoria Greene and BofA Securities Director of Equity Strategy Oh-Sung Kwon. Guys, good afternoon. Victoria, you're generally positive on the markets, especially, I guess, after this cooler CPI print. We can look at fundamentals, you say, but on earnings, you say afternoons have been rally killers. Here we sit in overtime in the afternoon. What do you mean?
I was so happy to see the rally hold. The January has been ugly in the afternoons, right? We've had so many mornings start off on a bright note, and then I don't know, the markets take a break at lunch and don't come back or something, but we've seen these rallies tail off time and time again this year. So for me today, it was so nice. We had that midday dip, and I was like, oh my goodness, here we go again. You know, S&P almost down to like 1% gains. And so to see it rally out, I think that's a huge sign of confidence in this rally still intact. And we finally had earnings to focus on, not macro, not Fed speak, not politics. It was earnings to drive it. And to me, we had this dead period where all it was kind of data drops and Fed speak. And now we can focus back on fundamentals, company profits. And boy, did they deliver.
Well, Oh-Sung, speaking of earnings, you emphasize the importance of earnings right here in testing the market's optimism. I'm curious how much leeway you think the investors are going to give global companies with this strong dollar and what it's going to do to guidance.
To me,
sorry, that was for Oh-Sung.
Oh, sorry.
Yeah, thanks for having me today. And I agree with Victoria that this earnings season is going to be crucial. We finally have fundamental data to really test whether that post-election optimism was real. And I think it was real. We think that companies are going to deliver earnings. We're expecting a 2% beat versus consensus. And more importantly, I think the tone and sentiment is going to be more upbeat from companies versus a couple quarters ago. And I think December really marked the beginning of a cyclical upturn in manufacturing for two reasons. One is because companies are pre-ordering as we speak because of potential tariffs. I think that's really going to kickstart a restocking cycle of inventories after 2 years of destocking cycle. And number two, we all know that there was a post-election surge in consumption. So those two things combined, I think that's going to provide a lot of cyclical tailwinds for earnings, and I think companies are going to deliver.
Victoria, it does seem like, though, and I realize bond yields have been a focus. Those have come down a little bit, at least towards the front end. Earnings and earnings guidance, the banks sort of set the stage nicely today. Semi-stocks, which have swooned, those have also been coming back today. Bitcoin back above 100K. All of that is working, perhaps, in the broader market's favor, but you still have all this fiscal uncertainty, and that seems to be kind of the big negative thing, potentially, that people, or uncertainty, I'll say, that people are focusing on here. We sort of get another taste of it tomorrow when Bessent, the Treasury pick for Trump, testifies in front of the Senate. How large is that overhang? How much uncertainty comes with those fiscal policy possibilities?
Sure. I think everybody's a little nervous what next week is going to bring and how aggressive this administration is going to be. What are the priorities? And are we going to be focused on cutting debt and cutting workforce? Or are we going to be focused on cutting taxes and reducing regulations? You have these push-pull, and everybody's nervous of how many of these levers are we going to pull at the same time, and how aggressive are tariffs going to be. And so we got, again, good news a little bit on the tariff front, maybe a slower rollout. So we're looking around all of this and saying, how economically friendly is this administration going to be focused on versus potentially how much are they going to be trying to fix systemic problems like the rising deficit and the debt? Because, again, we see that push-pull. If suddenly the U.S. government is the largest employer in the United States, if we suddenly see a huge workforce reduction, you could see that labor market get a little bit tougher, unemployment rate come up, government expenditures, large part of GDP. If we see a large reduction in that, again, we could see some struggle growing GDP, which could then outweigh if we don't get our tax cuts in this business-friendly environment. So for us, it's let's see what the focus of this administration on. Markets are betting, the banks are saying, everybody's saying, look, we're going to have lower regulation. No, oil and gas is loving it. Banks are loving it. We could see a big overhaul on that. But that doesn't necessarily reduce that overhang. How are we going to tackle the deficit? And are we actually going to delay the debt ceiling? All of these things out there, I think we're going to be a little bit on pins and needles the first 90 days until we really figure out the priorities.
Okay. Oh-Sung, I want to go back to something you were just talking about, and that is the fact that you think manufacturing has actually turned here. It speaks to perhaps this rotation or this broadening out we've seen in the market, what that means with the stage set here for earnings. What do you like going into this earnings season and through the rest of the year? And what are some of those key metrics that are going to guide you?
Yeah, I think the manufacturing downturn over the past 2 years, that was really one of the biggest reasons why the market was so narrow, because a lot of companies who are tied to manufacturing, they haven't been delivering earnings growth. If you look at consensus numbers, by Q4 of this year, 95% of companies are expected to post positive EPS growth. And I think the narrow earnings growth over the past 2 years was the biggest reason why the market was so narrow. As earnings start to broaden out, I think the market is going to broaden out as well. I like financials. We just saw, great results from the big banks this morning. Short cycle industrials who are also tied to the manufacturing cycle, who have been in a downturn over the past 2 years, I think they are also going to see an inflection point this earnings season.